There we go. Okay. So as Seema said, I'm Jay Kendall. I'm the Senior Program Officer for Innovation and Research at the Financial Services for the Poor team at the Gates Foundation. And today I'm going to talk to you about a couple of different data collection efforts and some of the things that we've been learning about mobile money in some of the markets we've been talking about today. Just to give you, I know I got to figure out how to use this thing. There we go. So just to give you, for those of you who don't know much about the work that the foundation does in this area, Financial Services for the Poor team, our work focuses on connecting poor people to digital payment platforms, usually through mobile phones, supported by dense agent networks, and through that, giving them the ability to access a broader range of financial services, credit, insurance, payments, etc. So digital, these sort of digital payment platforms don't just get birthed into a vacuum, right? There's a whole bunch of, financial transactions and economic transactions that poor people are already doing. And primarily, the current model that they use is all in cash and primarily informal. So I just wanted to sort of anchor things by taking you through, an example of how someone might do a financial transaction currently. We just think, imagine yourself in Lusaka, you're a formal sector worker, you have a job and you get a call from your family up country and they have an emergency, maybe one of the kids is sick and needs some medication. So you want to help them out. So you scrape together what cash you have available. You put it in an envelope or some sort of package. You go down to the bus station or the transport area in town and you try to find somebody who's heading in that direction towards your family. You wait around for a while till you find the bus going in the right direction that has a trustworthy enough driver. You probably pay him some money. You put the money on the bus and you hope that it gets there and eventually, if you're lucky, it gets to your family and they can use it. Now, you can imagine that type of transaction and the level of difficulty involved, the cost, the unreliability, the risk to the money, and the potential that maybe you wouldn't be able to find someone in time to get the money to your family. All of those elements are pretty common with all the informal cash transactions that poor people do. And that's a huge barrier to them using financial services and just to their economic lives in general. Now, you might think, well, if it's that hard, why isn't it really easy to sort of get them on digital platforms? So poor people, you have to think about them as existing within sort of a system. And this schematic kind of goes, gives you kind of a view of the basic set of transactions that a poor person might do, starting on the left-hand side with sort of sources of money coming into their household. They get paid by employers, they sell their crops and get, so they sell their crops and get income from that. They may have income loan from a bank, etc. And then there's, things that they use it for on sending money to their family, saving for a wedding or whatever you might have, bills, school fees, buying things in stores, all that kind of thing. So, in the long run, we want to migrate them onto digital transaction platforms so that they're doing all of this through digital means. And that's, obviously from the perspective of the operators, that's, more transactions is more volumes, more profits. But it's also more benefit for the poor person, which is why we're into it. They then have access to a wider range of financial services, and all of these transactions become easier, cheaper, safer, etc. Now, in migrating them on, we think that there's kind of a natural ordering in which you might attack as some of these things that you might migrate on. There's sort of a natural ordering as to which ones might go first and which ones might come later. What you're looking for are ones where there's a high need and that occur relatively frequently. And I think mobile money providers have settled on, a pretty good one, as some of the data that we're going to see in a second shows. People often need to send money to their family and friends. And as the example we went through a second ago shows, it's quite difficult, and the cash-based alternatives for doing so are very poor. Another one is sort of bulk pay sort of use cases. When you have a bulk payer or payee, it's much easier to address that issue because you just integrate them right into the system, and through that get a lot of different transactions. So those are sort of two of the use cases that we think are early use cases in terms of migrating someone's set of financial transactions onto a digital platform. So I wanted to set that up because it motivates how we collected some of the data and some of the reasons why we collected the data that we did. This first study that I'm going to walk you through was a partnership between us and the Gallup organization. Gallup does a world poll every year in 150 countries, most of the bigger countries in the world. It's nationally representative, and so covers sort of the market as a whole. And what we did is in 11 countries here in Africa, put on a module of about 25, 30 questions, getting at people's payments use cases. And in particular, we were looking for long-distance payments to or from counterparties in other parts of the country, because that, again, is one of the use cases that we think has the highest immediate need for electronic or digitization. So at a high level, the numbers, I think, are pretty dramatic. First thing it shows is that the demand for payments of that type is very large, right? So in the 11 countries, 134 million adults had done a payment of that type in the past 30 days, 53% of the population. And even more dramatic, I think, is that 112 million of them, or 45% of the population, had done it in cash, right? So there's a huge amount of money being sent across the country in order to pay people, whether it's family and friends or government payments or what have you. So I found that quite striking. And if you think about how bad those alternatives for doing that are, it should be a big market that could be addressable by a lot of you in this room. Then, so disaggregating the data a little bit and looking both at different markets and at different use cases, you see that, first of all, remittances are indeed the biggest use case. Now, it's important to remember that remittances here, the way we had defined it in the survey, was payment to or from family and friends, right? So there's a lot going on in there that's not sort of the typical, I send money home on a regular basis to my family out of my salary type of use case. Some of it's emergency, like the sort of example that we gave earlier. Some of it's supporting students away at school. Some of it's business related, probably. Family and friends often engage in business together, that sort of thing. But you can see that it's the biggest use case in all but South Africa. And then the other two major use cases were government and wage transfers and obligations and fees, which include bill pay and that sort of thing. The other thing, another point that came out of the data pretty strongly was if you look at the different channels for making these payments, we broke down the payments here in terms of those made by people living on less than $2 a day and those made by people living on more than $2 a day, so the poor and the relatively rich. You see that bank-based payment methods are primarily the domain of the rich, right? And if you look at the mobile penetration, it's actually pretty balanced between rich and poor. And if anything, mobile, which is on the top here. Whoops, sorry. Oh, now I don't know how to go back. Okay. Mobile is even probably penetrating the poor population even more. So I think mobile's really demonstrated that it has the ability to reach down into the lower income segment. Of course, that's very important in Africa, where that is the biggest bulk of the population. And this is just sort of another look at it. It breaks it apart by the market, and you see that in terms of the markets that are not primarily cash-based, there's sort of two different models. There's South Africa, Botswana, and Nigeria, which are primarily bank-based. And then you have sort of the mobile-based models where Kenya, Uganda, and Tanzania are pretty obvious. And then you have sort of a third class where it's primarily cash-based, where most of the money going across country is cash-based. So So next I'm going to take you through a different study. This was a set of studies that we launched in Pakistan, Uganda, and Tanzania. And these are quite different than the Gallup World Poll. These are much more in-depth in terms of the questionnaire. The sampling methodology is a bit more robust. So we paid a lot of attention to making sure that we're really getting nationally representative samples and that we're getting out into the poor areas and slums and that kind of thing. And then we're also tracking the same families over time. So we're coming back to the same families over a few years. And our motives for launching these more in-depth studies were primarily, we wanted to understand the welfare implications of mobile money. And that will come a few years down the road once we've been able to track families over time. But we also wanted to generate some useful market intelligence as well. So that's what I'm going to go through here. And this data, I should say, is brand new. And so if there's a few cases where I have only some of the countries or some of the obvious data points are not there, it's because we're still kind of analyzing the data. So here we asked people, so of course we asked people whether or not they were mobile money users. We also asked them when they had signed up. And from that we can build a sort of a time series profile of how the markets have developed over time. And you can see Tanzania in particular has really taken off in the past maybe 2 years and really been growing pretty dramatically. Uganda's struggling a bit, but still making pretty good progress. And Pakistan, I don't have the full time series yet, but it's a bit lower. So this is sort of a breakdown of the adult population in terms of their phone ownership and mobile money usage. And you can see that one thing to note, I think, is that there is a pretty large, and this is, by the way, I should have mentioned, these surveys were done at the household level. So all of the basis for this is households, not necessarily all adults. So you can see, I think, again, there's a pretty big chunk of households in both countries that just don't have a phone and don't have access to a phone. So that's obviously going to be a barrier to further mobile money uptake. If we look in now at the users, you actually see two pretty different scenarios playing out in both markets. So, and they have a lot to do with both the regulatory environment and how the markets have shaped up in each case. So in Tanzania, you see the unregistered users, which are users who are using mobile money but don't have an account, very small. And that's mostly due to the fact that in Tanzania, there was SIM registration was required by the regulators. And so when everyone came to sign up for their SIMs, the operators signed them up for mobile money automatically. So everyone basically got registered. And in fact, this 2% of people may actually be registered but not know it and are using someone else's mobile account for some reason. Then, of course, there's a fairly big chunk of registered users. And then down here we have 15% of the adult population who have 15% of the households in the country have more than one user in the household. And there's two things going on there. Some of it is likely multi-homing. Tanzania, there's a number of operators, Tigo, Voda, a couple of others, who are getting some traction in the market, and so there are probably some customers who are multi-homing there. The other thing is just as Tanzania being a bit more advanced, you're seeing households just adopt, more than one person in the household will get a mobile money account, a husband and a wife, or someone else is in the family. Over in Uganda, you actually see a much bigger percentage of the users are unregistered users, and there's a couple things going on there. Some of it is sharing accounts, but more of it is actually people will just go up to the agent and do an unofficial over-the-counter transaction where they don't put it through an account. They just give money to the agent and tell the agent to send it to someone for them, and that keeps it from them having to sign up for an account, go through the hassle of signing up for an account, and from having to learn how to use it. And a lot of the people feel a little bit daunted by learning how to use the user interface and that sort of thing. So just going to kind of dive in on a couple of important market segments. One is the poor population in both of these countries, and you can see that. I think the percentage of users within the poor population is around 28% in Tanzania, which is pretty close to the 33 that it is in the overall population. And similarly in Uganda, it's about 15 relative to 20 in the overall population of households. So you know, penetration into the poor population's relatively robust in both markets. I also just took this cut here of penetration amongst women, and this is a bit of an approximation because again these were at the household level, but we were able to extract some some statistics on just sort of adults in general. And if you look at the user base in terms of the percentage which are men and women, in Tanzania it's pretty high, pretty well balanced. Uganda a bit less so, and Pakistan very much a male user base, primarily for cultural reasons, I think. To me, what this says is, Tanzania really tells us that, women certainly have plenty of demand for the product and plenty of use for it. And if you're, I think if you're ignoring half the adult population, you're probably missing a pretty big chunk of the market. So probably worth investing some marketing dollars there. So now that we've been through sort of the basic picture of the market and the uptake in different segments, I wanted to dive into a couple of different specific topics. First we'll look at adoption and what's driving adoption in terms of how people learn about mobile money and who influences them to adopt it. Then we'll go into experiences with agents and some of the alternative products, cash-based products that people use for remittances, and then go into a couple of different use cases that I think the data supports the notion that they could be powerful ways to reach sort of new customers and expand the market. So first we'll look at where people reported. So we asked people where did they learn about mobile money first. And interestingly, I thought was that just the really high percentage of people said that they learned about it from some form of media. So a lot of this is radio, especially in urban areas, in rural areas, tends to be radio. In urban areas, you see a bit more of a mix between TV and radio. But primarily those two channels. Some of it's through print media and that sort of thing, but primarily radio. And then, there's a little bit, people are learning from friends and colleagues and that kind of thing, but relatively small. The main channel is through media. But when you actually ask people what motivated you to sign up for an account, they'll tell you, for the most part, and overwhelmingly, it's their friends. A friend of theirs or an associate said, hey, why don't you give it a try? And they did. And that was actually surprising to me. I would have expected a bigger percentage over here in terms of the next biggest prompt to actually try mobile money was someone who wanted to send them money, telling them, hey, sign up and I'm going to send you money, which I would think would be a really big motivator. So I think what this slide and the last slide tells me, and I think it reinforces some of the learnings we've had in discussions with our grantees and other partners, is above the line marketing is important. It helps you kind of get the word out and establish the brand in people's mind. But when you actually want them to try the product, you really got to go with things that motivate the sort of viral adoption cycle. You got to get their friends, their colleagues, you got to get people to send them money and that sort of thing. So incentive systems that build on this phenomenon are probably the right way to go. And actually, it's not on here, but in rural areas, a big one that came up was the agents themselves. And agents, of course, very close members of the community in smaller towns and smaller villages and that sort of thing. So that below the line marketing is probably the best way to actually get people to sign up and use the account. So one of the biggest challenges, and we talked about it earlier today, in any mobile money deployment is building and managing the agent network, and I think most of you know that. We see here, even in two very advanced markets with two advanced deployments, that it's kind of consistently an issue. And 80% of the users that we talked to in the survey reported some sort of significant agent issue. The two biggest being either the agent wasn't there, or they didn't have float, either in the form of e-value or cash. So I think that reinforces the fact that agent network building is always going to be difficult. We also, so I'm going to explain this slide because I know it probably doesn't pop out at you exactly what I'm getting at here. We also talk to people about how they get to agents and kind of some of the barriers that they face and their experience in terms of going to an agent and coming back and that sort of thing. So we got information on So I'll just zoom in here on the urban sector. This column here is, the blue is the percentage of people who reported going directly to an agent and back as kind of a one single purpose trip, versus 42% who said that they went to the agent on the way to do something else, right? Going to work primarily was the main one. So there's a fair number of people who are actually going to the agent, just to go. And in urban areas, they're going about 1 kilometer. That was the median distance that they reported traveling. And they're spending about 40 minutes there and back. So 2 kilometers round trip, and then they spend about 10 minutes at the agent. So it's a fairly significant investment, of time when you think about the fact that they're not doing anything else. And then in rural areas, it's even worse. Most people are going solely for the purpose of going to the agent. They're going about 3 kilometers, so 6 kilometers round trip, walking or biking, often actually taking transport and paying to go, and spending around 50 minutes time, and then adding to that whatever time it takes to do the transaction. So the point, I guess, of going through all this to me is, it's not just that when your agents are not available either because they're not there or because they don't have enough liquidity, that you lose transactions, you lose sales, you lose revenue. You also potentially are really inconveniencing your customer, right? If someone does a 6 kilometer trip to go see your agent and finds out they don't have enough money, come back tomorrow, I mean, that's a pretty big hassle, and you're going to be pretty frustrated. So I think it reinforces the need, the importance of agent management. So we also asked people, and a lot of you probably pay pretty close attention about what your competitors are doing in the market, and keep good track of what they're doing. We also asked people about alternatives to mobile money, and I think that's the real competitor. Are some of these alternatives, some of them informal and some of them formal, as far as ways to get money across the country. So here you see Uganda. Pretty strong showing by mobile money in terms of the size of these circles as the percentage of the population, or percentage of transactions that were going through these different channels. So mobile money is capturing 31% of the market approximately. The bottom axis is the average value of the remittance sent, and the vertical axis is the cost. So mobile money is a bit costlier, but it's doing slightly bigger transactions. And it's, like I said, about a third of the market. Main competitor seems to be hand delivery, which is essentially free, and still has a pretty big part of the market. But you can see people are pretty much sending smaller remittances through hand delivery, likely because it's either riskier or not as reliable for sending something bigger. Tanzania looks pretty different, actually. Their mobile money's made more progress. It's actually a dominant way of sending money across the country. With the households we talked to, 62% of the market, and likely that's because hand delivery there seems to be a bit more expensive, and potentially that's because there's a lot greater distances involved in Tanzania. So people are forced, if they want someone to take money across the country, they tend to pay for it. But mobile money's made a lot bigger inroads there into the sort of how to move money across the country market. Then just at the end here, I just want to go into a couple of use cases for mobile money that I think are important ones to watch. And just to motivate it, a lot of users or non-users reported not really understanding mobile money. So non-users said they don't understand it or that it's too complicated. Users reported thinking that it's only for sending money to your family and friends. So one segment that showed up was people who actually use it for business. And I think this is a really important one. It's only 20% of the user base in Uganda and Tanzania. But this is actually data from another study that we did in Kenya of 1,000 small business users, or small businesses, almost all of which were mobile money users because it was Kenya. And two things that really stood out for us. One is just how high volume small business users are relative to the normal population. Something like 80% of the small business users that we talked to had over a transaction a week, whereas a typical person might do one or two per month. The other thing that really stood out was just the fact that mobile money adoption in this small business segment tends to proceed along the value chain in kind of a viral way. So most of the small business users said that they had started using it for business purposes because others in the value chain, either customers or suppliers, had requested that from them. And so I think you get, when you combine the two, you have high volume users and you have ones who tend to then pay others who are also high volume users and ask them to start to adopt the product. They're an important segment, I think, to drive volume and to drive further growth of the market. So last thing I wanted to focus on here, we asked people what their reasons were for sending remittances. And we asked both mobile money users and people who were not using, maybe they were sending money by hand or by a bus or whatever it was. And they both had pretty similar reasons. And as you might imagine, the main one was sort of sending money regularly to a family member or friend or whoever it is, a relative, to support them. But I wanted to focus on the second biggest use case, which is helping people out in an emergency. You can see it's somewhere between 15-20% of the users who use mobile money tend to use it for that reason primarily. This slightly complicated slide, we asked people, and this gets at our motivation for launching the survey, which is to understand the sort of welfare benefits that people get out of mobile money. And we wanted to understand sort of the types of shocks and the things that they are dealing with, which motivate that emergency help-based use case. And you can see that, and I found this surprising. I mean, something like 45% in Uganda and Tanzania of the households had experienced one or more severe financial shock in the past 6 months. So, and quite a number of them had experienced more than one, so a couple times within the past 6 months. And these green tabs on the side break out what those shocks are. And you can see a very large percentage are illness or death of a family member, and a significant second set of shocks come from loss of livestock or loss of crops. Those are very difficult, challenging times for a household. You have a death or a serious illness in the family, or the loss of a cow or some other valuable part of the family's asset base. And I guess my point with this was that if you can position mobile money as a way to help people out in a time like this, I think that their willingness and their need for something is very high. So the willingness to sort of try something new and maybe pay for it and that sort of thing is pretty high. And it's also a time when you can potentially establish a lot of loyalty by helping them out in a really difficult situation. So I think I'm not exactly sure how to target this segment or this use case in particular, but I think if you had sort of promotions and advertising that were geared towards helping people out in emergencies, I think you really sort of build. It's a good basis to build customer loyalty and to get people to try the product. So that's sort of some of the data that we've been looking at in our different markets. I put up the two studies that sort of provided most of the data for this. There's a lot more results in there. There's a lot of other results. And actually the data itself will be online for this FIT study eventually in the next few months. So I encourage you to go look at it and see if there's results in there that are useful for your work.